Good morning, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is November 8th, 2022. It is election day in the U.S. U.S. Voters are going to the polls. I voted by mail already, so no need to go to the polls, but we are seeing the stocks move higher as a result. The idea is that the Republicans get in. That's going to be good for the stocks. The House is expected to switch over to the Republicans from the Democrats. The Senate is still up for grabs. So we'll see how all that plays out. May not know for a number of days, maybe weeks, maybe a month. Who knows? We'll see how it works out. So let's take a look at the technicals that are driving the markets. We'll start by taking a look at the euro versus US dollar. The euro versus US dollar had two big days to the upside here over starting with Friday after the unemployment report. The better than expected unemployment report initially sent the dollar to the upside here, the euro to the downside, and then boom, shot up. And technicals started to take control. When technicals take control, they beget other technical moves to the or continued moves to the upside. Why? Because risk can be defined and risk can be limited against certain technical levels that give traders an advantage to risk a little to make more than a little. So these moving above the 100-hour moving average was a step in the positive direction that turned up sellers into buyers, and we moved above the 200-hour moving average and above this swing area through here. A number of different swing highs, swing low, or swing highs, swing highs, swing high. And we use it as a swing low through here, so on and so forth. But moved above that level on during Friday's trade and moved back down but closed above that level on Friday. And then on Monday's trade, we opened lower and actually moved below the 200-hour moving average. But we found support right here against the low. It's hard to see, but against the low of this swing area. And then we found support against the 200-hour moving average. And we found support against the high of this swing area. And then we moved above the 99.51 level. Well, we all know that level from going to the daily chart, and we go back to July. That was the low right here. This was the first move below the parity level, and the low price bottomed at the 0.99515 level. Going back to our hourly chart now, so moving above that level gave another boost to the upside, and all that movement yesterday saw the price move really close or within 10 or so pips of the 100-day moving average. That 100-day moving average stalled the rise right here back in the end of October or toward the end of October. So traders leaned against that level. So there is leaning on the down on the way to the upside against the 200, against the swing area, so on and so forth. And there's leaning also at the top side when we start to reach a limit. Traders will lean against that risk a little to make more than a little, and we saw the move back down. Now that move to the downside. If you take a look at these swing highs, so we had 2 days of swing highs right there, and then we had a swing high. This is off of the FOMC last week, and a swing high off of Friday's trade, and then a swing low yesterday into this area right through here. And lo and behold, we found support buyers against that area again today. So that is our risk defining level on the downside for buyers. The buyers are more in control above the 100 and 200, above the 51 level, above this swing area right through here. What we need to do is get above this swing area through here where we had swing lows, swing high, swing high, moved a little bit of here, and then moved to the upside yesterday. So we need to get above this level and then start our way toward the 100-day moving average where the big battle takes place. We need to either get above the 100-day moving average or move up to that 100-day moving average and come back down. So that is the the battle plan here for the euro versus US dollar. Right now, the buyers are in control above the 0.9965 to 75 level. As long as the price can remain above that level, still like the upside here for the euro versus US dollar. If we move back below that level, then we have problems. Also, be aware of the 100-day moving average. It's okay for traders to sell against the 100-day moving average because the stop is just above that level. So, we're definitely in a battle, looking for the next shove for this currency pair. Let's take a look at the dollar versus yen. What I like about this chart is a couple things. On the top side, we do have resistance against this trend line here. This trend line started back here, and we had different highs through here. And on Friday, Friday, the price moved up to that level after the non-farm payroll, found early sellers against that level and pushed to the downside. The other corrective rally here that we saw in yesterday's trade leaned against the 100-hour moving average. The price moved down from there. And in trading here today, the price leaned against this swing area right here, the swing area defined by a number of different, this is level by, this chart hasn't changed, these levels through here where the price, all these are different arrows here where the price had tops or bottoms in this area. Got a little messy here on Friday's trade, not surprisingly, and in trading yesterday, we did see the price break back below that level, and on the corrective move to the upside, similar to what we saw in the euro, we moved back into this swing area, found willing sellers against that level, pushed the price back down to test this low area, or this I guess this low area through here. This low area is defined by this swing low right here. This was off a big 500 pip move to the downside here in the dollar versus yen. And then we sort of waffled above and below these levels here with volatility. This is the FOMC day, break to the downside, quick move to the upside. And trading yesterday, we came down to that low and low again here today. It's somewhat random, but it is a target that we need to get to and through. And if the price is able to get below that level in trading here today, we're going to move down to this area through here. Again, another swing area. So this is a close resistance. Probably wouldn't want to see the price move above that level, but we also have the 100 and 200-hour moving average to defend, or that could defend the move to the upside here for the dollar versus yen. So be aware of each of those levels on the top side and the downside. Move below the 145.15-ish type area with momentum. And we look for a move down toward the 145.46 to 145.08 from a technical perspective. Let's take a look at the sterling versus US dollar. I'm going to switch this over to the 4-hour chart just to start off here. And you see this trend line here. This trend line connects a number of different, whoops, sort of missed that line right there. Highs, highs, highs. And in trading yesterday, we got close to that high right there. And we have since fallen off after pretty decent rally over the last few days to the upside for the sterling versus US dollar. Going back to our hourly chart, this is how close it got to that trend line right through there, and the market started to rotate back to the downside. We are trading above and below the 200-hour moving average. That's the green line in this chart. If we're able to, and we're seeing some reluctance on both sides here. We are also below this swing area through here, which also goes back a little bit further. If I just bring this back, look at all these levels. This area right through here is where the swing area is defined, and it even goes back even further through here. So lots of reasons why this yellow swash right here is a key level, and indeed in off the hourly chart, the market did find sellers against that top side of the area right through there, and trading here today. So that's a risk level around the 115 level. Stay below that level. Sellers are in play, okay? But the 200-hour moving average is going to be our key barometer for moving up to the either up or down here, and we are seeing some reluctance on the test here. We also may have this area through here. Well, but we do actually have this area here near the 114.36 level, where we have a swing high back here. We have a swing low just a little bit below there. We have a swing low here that came right down to the level right there. And in trading yesterday, we traded a little bit below it, but then reestablished the level as support. So not surprised that this 114.36 level is providing some problem along with the 200-hour moving average. We'll see which way we go from here, but needless to say, this area is somewhat key for the sterling versus US dollar, and the market is paying quite close attention to it. So there you have it. Look at some of the major currency pairs as we head into the new trading day. My name is Greg Michalowski. Good fortune with your trading. Bye bye now.